So we, again, we are in the Yukon of Canada. We have what we, I think, like to term a de-risk, low capital, kind of a Alexco right-sized project. Our mine plan has really been designed to minimize the capital on the front end, maximize our return, and really shorten the ramp-up period to reach production. So we are on track right now to be producing silver in the fourth quarter of this year. I think clearly we have an excellent track record of exploration success. We now have over 100 million ounces of silver on the books in all categories. That includes probable reserves, indicated and inferred resources. And of that 100 million ounces, only about 30% of that is in our current mine plan. And I think we're one of a rare breed. There are just not many primary silver producers left in this industry, meaning over 50% of your revenue coming from silver. Again, so Alexco is certainly on the top end of that in terms of our leverage to silver. And again, these aren't just ounces in the ground. These are high-grade silver ounces that will be converted onto the income statement by the fourth quarter of this year. So over the past, I think several months, our focus at Alexco, it clearly has been to move this district and position it for a restart of development and production. So we sold our environmental business. This was a great business, Alexco Environmental Group. We sold that earlier in the year. Not only did that provide some additional capital for the restart of Keno Hill, but it really simplified our business model so that we could just focus on Keno Hill itself. It's been a lengthy permitting process in the Yukon, but we're through it now. So we have all of our permits in place, including our water use license. So we are now permitted at these two deposits, Flame and Moth and Bermingham, really all the deposits, for the next 17 years. As Chen mentioned, I think we're in an excellent financial position here. We are fully financed to production through the end of the year. We recently completed a $30 million financing. We have no debt, and we do have a debt term sheet available if we wanted to draw down on that. And I think in terms of kind of risk management, risk mitigation, we just successfully renegotiated our streaming agreement with Wheaton Precious Metals. So that that not only provides us some price protection on the downside, but it actually increases our upside participation in this current silver environment. And I think we also need to mention that we do have a very, I think, rigorous COVID management plan in place at Keno Hill. Clearly the safety and health of our employees and the communities in which we operate is a top priority, especially as we ramp up activities at Keno Hill. So this is what Keno Hill looks like. Again, a very large district, about 240 square kilometers in size. It's located about 400 kilometers north of Whitehorse in the Yukon. We're on an all-weather road connected to the Yukon Energy power grid, year-round airport. So again, for being in the north, you can't really get better infrastructure than we have at Keno Hill. Our plan and our focus right now is on the eastern end of this district, where we have 4 deposits that are included in our pre-feasibility study, our mine plan in total. And the majority, 90% of that mine plan comes from Bermingham and Flame and Moth. And those 2 deposits represent about 1.2 million tons of 805 gram per ton of silver. So our plan is to sequentially put these deposits into production. We'll start off at the Keno mine, which was a past producer. We'll salvage about 20 to 30,000 tons out of that mine. We'll use that to commission the mill. And at the same time, we will then ramp up development at Bermingham and Flame and Moth. We'll look at the schedule, but we currently have miners underground at Keno as well as Flame and Moth. So we're certainly well underway to meeting our fourth quarter target here. In terms of the production profile, this is the silver and base metal, production over the next 8 years. As you can see, once we're ramped up, we'll be producing 3.5 to 4 million ounces of silver per year. Again, that's not equivalents. Those are silver ounces. And then on top of that, there's about another 10 to 12 million pounds per year each of lead and zinc. So, a reasonable amount of byproduct. But by any measure, again, this is a primary silver producing asset with over 75% of our revenue going forward coming from silver. And we'll turn our attention a little bit to the mine plans, a little bit more technical, so you know what's happening underground here. So this is a long section of the Flame and Moth deposit. Again, this was discovered back in when we were still operating at Keno. So over the last several years, we've drilled this off. We have 400 meters of decline that is already completed. You can see that on the top end there. So this deposit, this mine plan represents about 700,000 tons of 672 grams per ton of silver, and then there's about another 7% combined lead and zinc that goes along with that. There's actually a little bit of gold here at Flame and Moth. We have about a half a gram per ton of gold that will be recovered as well. So we have about 300 meters of primary ramp left to complete before we hit that first level access, kind of right in this area here when we start. And again, the miners are underground as we speak. Again, I think it's important to show and just compare the total resource here with the mine plan. So there's only about half of this resource is currently in the plan, and that's by design. So certainly once we're underground, we'll continue our underground exploration program. So this is the Bermingham deposit. There's been a lot of news about this discovery over the last couple of years. Compared to Flame and Moth, Bermingham is larger, but more significantly, much higher grade. So the mine plan here currently represents about 360,000 tons of 972 gram per ton of silver, and then there's another 4% combined lead and zinc. In our current design, we're carrying just over 30% dilution in those grades. So that 972 gram per ton is a diluted grade with 30% dilution. So it's narrower, about 2.5 to 3 meter wide mining widths. And this deposit is predominantly cut and fill, mechanized cut and fill, which we're very familiar with. That was the mining method that we used at Keno. So again, 75% cut and fill. But there is some long hole tons, and 25% or so of this is long hole, which certainly helps on the cost structure. And then this mine, it'll produce around 250 tons per day. So when you combine Flame and Moth and Bermingham together, we start off at 400 tons per day. We'll look at our mill, and then we ramp that up to 550 tons per day over a 7 to 8 year period. Quickly talk about metallurgy. Again, we have a modern 400 ton per day conventional flotation mill. It was built in 2010. We operated it for over 3 years. It's been well maintained. It makes two products: a lead silver concentrate and a zinc concentrate. We are currently completing a number of kind of improvements to the circuit. We're adding a second ball mill. Putting some additional dry filtering capacity in for the tailings, a couple of regrind mills, and some other process improvements. But I really just want to draw your attention here to the concentrate, I guess, value, if you will. This lead con is about a 54% lead, but more importantly, it's going to average over 15,000 grams per ton silver in the lead con. And there just is not another product like that out on the market right now. So that we've had a lot of interest from the off-takers. So we should be finalizing an off-take agreement here in the very short term. So this is what our production or execution schedule looks like. Again, it was a fairly lengthy permitting process in the Yukon, but we are now over that process. So we were granted a final water use license here about 2 to 3 weeks ago from the Yukon Water Board. So that authorizes, mining and development and processing from Flame and Moth and Bermingham for the next 17 years. So again, we've got a lot of time to go now in terms of our permits. We talked about some of these surface infrastructure projects already well underway at the mill. Again, we are underground at Keno. We should be drilling long hole tons, some of these long hole blocks, literally within the next couple of days. We'll be starting to drill those off. We're starting to advance the remaining development at Flame and Moth. And all of this is leading us to, again, confident to have silver production, concentrate sales in the fourth quarter of this year. So just a few months away. And again, I think that's really what we want to underscore is this is silver, high grade silver that can be delivered into this $27, $28 silver market that we're currently in. Just a quick, I think a few comments on exploration. Again, Keno Hill has been, we suspended operations in 2013, but certainly haven't just been sitting around since then. And I think we've added a lot of value to the shareholders over the last several years, really driven off the drill bit and driven by our exploration team. So we just launched our 2020 exploration program here about 3 weeks ago. It's a smaller program, but it's really focused on this Bermingham deep target. So we'll be drilling about 4,000 meters this summer. So again, we should be done here in a couple of months. And it's really designed to kind of target that expansion and provide some additional confidence in that high-grade mineralization that we discovered last year. You can see some of those results from our 2019 program. Just over 8 meters true width of 1,400 grams silver, another meter of 2,500 grams silver. So, we think we clearly have, something here at this Bermingham deep target that's an extension of our current reserve that's in the mine plan. Those intercepts are about 200 meters below that northeast zone, which is currently in the mine plan. And these are really the first drill holes that have reached the stratigraphy that hosts the Hector Calumet mine. That's about 1 kilometer away. Again, that's a historic producer in this district. It produced over 90 million ounces of silver over a number of decades. So again, that's really, I think, the target that we, that we're trying to develop here. So, so there'll certainly be some, I think, exploration news coming out in the next several months. In terms of, again, leverage to silver, again, Alexco really is a rare breed. There are just not many primary silver producers left in this business. A lot of, silver producers have diversified, they're into gold, and that's good. But if you're really looking for leverage and beta, if you will, to a rising price environment, Alexco really does offer the highest in the industry, and I think you can certainly see that in our comparison to some of the other primary producers. In terms of our capital structure, we've got about 136 million shares out, which I think for a producing company, a near producing company, we've been very cognizant of our share structure. Management is certainly vested in this company. We have been from day one. Clint Nauman and myself are the co-founders of this company. So we're clearly vested in the success of this company, as well as maintaining a very, very tight share structure. And I think I just want to maybe leave you with just a few points here. Again, Alexco is a pure silver play, a primary silver producer when there are just not too many left in this industry. We have what we think is kind of what we call an Alexco right-size project. It's de-risked, it's low capital. We have only about $20 million in capital remaining to reach production. It's scalable in terms of there's only 30% of this mine plan, or 30% of the resources is in the current mine plan. We're months away from producing producing silver in a rising silver market. We're going to continue our ongoing exploration program, and we're in the Yukon. We're in a great jurisdiction in Canada. So with that, again, thanks for everybody's attention. Thanks for everybody joining us today, and I do look forward to some questions later on.